Just because the Fed is cutting interest rates doesn't, it's not a panacea. It doesn't ameliorate all of our problems. We still have massive asset bubbles in the real estate market, in the equity market, and in the credit markets. That didn't go away. As a matter of fact, they could be getting much worse because of.
You're watching Silver News Daily. Subscribe for more.
Did you know that silver could be on the verge of a historic surge that could change everything? Mike Pento, one of the sharpest financial minds in the game, is urging silver stackers to act now, before it's too late. The market conditions we're seeing today are creating the perfect storm, and if you don't start stacking silver immediately, you could be missing out on one of the biggest opportunities of our lifetime. Stay with me because in this video, we're breaking down why silver is about to explode and why experts believe you need to act fast.
Jerome Powell's nefarious by nature, but I mean, he's got to be aware that the policies enacted after COVID, which was $6 trillion of deficit spending, $5 trillion of debt monetization by the Federal Reserve, by expanding its balance sheet in that short duration of time, that has eviscerated most of the middle class. So it's, Jerome, it's not the rate of change of inflation that he should be cheering. Okay, so it was 9% according to official statistics, and now it's 3% or 2.5%. Core rate is 3.2, headlines 2.5. Big deal. It's the level of prices that is the problem for most Americans. So if you look at average hourly wages, they're up about 22% over the past 4.5 years, and CPI is up about 22% over the last 4.5 years. Well, congratulations, there isn't a problem. That you say, okay, but wait a second. If you use the CPI, it's not such a big deal. But if you look at things like the home prices that are up over 50%, insurance costs 50%, food costs over 30%, car prices up, over 40%. So in reality, inflation's up about 50%, and their wages are up 22%. And that's average wages, Elijah. It's not the median wage, it's average wages. So it's skewed towards the top end because the top, 10% or 1%, the top 20% of the population is doing pretty good. Their stocks are up and their houses are up and they're feeling pretty good. But most people have been, if you're a renter or if you don't have a decent job, you're just struggling to survive every day. So the answer is, I'm befuddled because, to answer your question, I don't understand why he's declaring victory over inflation. He should be saying what consumers really need is deflation to bring prices back in line, asset bubbles back in line with reality, or to a price that can be supported by the free market. And he's not doing that. He's declaring victory. So, but here's the thing. He cut by 50 basis points, but does that fix everything that's wrong with the world? And you listen to Wall Street, you think, oh, the Fed's got our back. Well, the last few times the Fed cut by 50 basis points didn't work out so well. So they cut rates in 2020 because of COVID very quickly, in a few months, down to zero. But the S&P still lost 35% of its value. And in 2007, they cut rates in the summer by 50 basis points because they realized there might be a problem, even though it was contained, and then we weren't in a recession. The Fed had our back, and the Fed put was back in place.
When we talk about silver, we're not just discussing a shiny metal you can hold in your hand. We're talking about one of the most powerful tools to protect wealth during uncertain times. Silver has a long history as a safe haven for investors, especially when the financial markets are in turmoil. Why? Because silver is real, tangible, and scarce, its value isn't tied to the whims of government policy or the instability of fiat currencies. Let's look back at history. In the late 1970s, when inflation was out of control and the economy was in crisis, silver prices skyrocketed to nearly $1.50 an ounce, up from just $1.06 a few years earlier. And in the aftermath of the 2008 financial meltdown, silver surged again, reaching close to $1.50 as investors fled risky assets for something they could trust. But it's not just silver's track record that makes it an attractive investment. It's also how it behaves when the world is facing inflation, political instability, or economic downturns. When the value of paper currencies starts to crumble, when governments print more and more money, silver holds its ground. It's an asset that can't be inflated away, and unlike stocks or bonds, it doesn't rely on any single company or government staying afloat. Today, we're in one of those pivotal moments again. Inflation is creeping back up, central banks are struggling to control it, and global debt is skyrocketing. These are exactly the kinds of factors that have sent silver prices soaring in the past. Mike Pento knows this, and that's why he's urging investors to stack as much silver as possible now, before the inevitable surge hits. And if you're wondering why silver, in particular, is so crucial right now, well, stay tuned, because that's exactly what we're diving into next.
In the summer of 2007, but the stock market still went down by 50%, the S&P, in the ensuing couple of years. And the same thing in 2000. In 2000, the Fed started cutting rates too. And 2 years later, we were down 50% in the S&P 500. So the fact that the Fed is cutting interest rates, I think they started in 2001, just be specifically correct. But just because the Fed is cutting interest rates doesn't, it's not a panacea. It doesn't ameliorate all of our problems. We still have massive asset bubbles in the real estate market, in the equity market, and in the credit markets. That didn't go away. As a matter of fact, they could be getting much worse because of what he's doing. But I think if you ask me, my opinion, and you did because you had me on your show, I don't think what he's doing is good enough. I think it's too little, too late. I mean, we still have quantitative tightening going on, right? I mean, the Fed's balance sheet is still shrinking, so the Fed's not adding liquidity. The Chinese are adding a lot of liquidity, but that's renminbi. It's not a fully convertible currency, so it's not clear to me how that immediately turns around the liquidity issue that we have. The reverse repo facility is almost completely dry. So there are a lot of reasons to believe, and we'll get it. I don't want to sit here and do a diatribe from one question that you asked me, but listen, we have some pretty worrying trends, like the unemployment rate and delinquencies and defaults are all rising. Those tend to be secular trends when they begin. They don't stop because the Fed cut by 50 basis points. So, and here's the one other thing I want to mention, and I'll let you back in here, and I do apologize for my long-winded answer to your question. This is the time when the time that the Fed is cutting now happens to be the first time in history we have a problem with inflation and we have an insolvent government. And the Fed's rate cuts were well telegraphed. So the longer duration bonds already priced in. The bond market has already priced in the Fed's rate cuts. When the Fed started cutting rates, the 10-year note was 3.6%. Normally, the 10-year note is about 5% plus. So, in other words, what I'm trying to say is that the Fed is cutting rates to get interest rates to fall, but they already fell, and now they're rising because the Jerome Powell thinks that the fight with inflation is over. So everything that he's supposed to be doing to make the economy better is the exact opposite. So rates are rising. So mortgage rates will rise, and costs to issue debt will rise, and that's going to go against everything he's trying to do. So to wrap it all up, we're not in the clear just because the Fed cut rates by 50 basis points, even though I think he's an absolute moron for doing it.
As we move into 2024, the global economy is standing on a razor's edge, and it's becoming clearer by the day that silver could be the asset to own. Why? Because the conditions we're seeing right now are eerily similar to what triggered past silver surges. So let's break down exactly what's happening in the markets that has experts like Mike Pento sounding the alarm. First off, inflation. After years of unprecedented money printing and massive government spending, inflation has become a persistent threat. Central banks, including the Federal Reserve, have tried to tame inflation by raising interest rates, but these efforts have only managed to put a temporary bandage on a much deeper wound. The real cost of living is skyrocketing. Everything from housing to food to energy is hitting record highs, squeezing the middle class like never before. And historically, This is when precious metals like silver shine. On top of that, we're seeing global debt levels spiral out of control. Governments and corporations alike are drowning in debt, with no clear path to paying it off. To make matters worse, central banks are between a rock and a hard place. They can't raise interest rates too much without crashing the economy, but keeping them low only fuels more inflation. This debt crisis isn't going away anytime soon, and when confidence in government-backed currencies begins to erode, investors rush to assets that can hold their value, and nothing holds value like silver. But the storm doesn't stop there. Geopolitical tensions are also ramping up, whether it's conflicts in Eastern Europe, instability in the Middle East, or the economic standoff between the U.S. and China. Uncertainty is the new normal. Whenever the world is on edge, demand for safe haven assets spikes, and silver is one of the most sought-after safe havens. So here we are in 2024, rising inflation, staggering debt, and a world that's becoming more uncertain by the day. All these factors are creating a perfect storm that could send silver prices skyrocketing, just like we've seen in previous crises. And this is why Mike Pento is urging you to act now, because once silver starts its run, it moves fast. You don't want to be left behind when the silver train leaves the station.
They do. I mean, so the Fed funds target rate is 4.5 to 4.75 right now. If they can cut to zero, they can cut to negative. Especially if you have a digital currency, a CBDC, they can cut to negative negative 100% if they wanted to. They just say, put your money in the bank. And the interest we're going to charge you is 100%. You have nothing left, so you better not put your money in the bank. You better just spend it. That's what they could do. I mean, I'm using hyperbole, but they can cut rates to zero. They have a lot of room left to go. But if they did that, Elijah, like I just said, what would happen to long-term interest rates? What would happen to commodity prices if they did that? I mean, it's one thing to cut interest rates to zero or to 1%. They cut rates to 1% in 2001 to 2002. And then they cut rates to 0% after, from 2007 to 2000 and the end of 2008. And then they cut rates to 0%, after COVID. They can do that. And they did it with ease because we had a deflationary problem, or at least according to the minds of the government, we had a problem. We can't seem to get to 2% inflation. If only we can get to 2%, because, 1.9% doesn't really work. The economy can't function at 1.9%. This is how they think. It's crazy. So, but now we have a problem where inflation, and you look at this morning's, I don't know when this is going to air, but we look at this morning's ISM services report, showed that inflation is a real problem for corporations. It still is. So the Fed can very well cut interest rates to 0% to bail out the stock market. They might not like the reaction because interest rates on the long end of the curve, which the Fed does not control directly, they would have to actually go and buy those bonds. They're controlling the money market rate by the Fed funds rate. They have to go some massive QE program to buy long-term debt, U.S. Treasuries, which would be hyperinflationary. I'm not saying they won't do that, but they're not doing it now. They're supposedly doing QT, and you could have interest rates spike out of control, which would destroy real estate, would destroy the stock market. So I guess I'm saying there's no easy answer this time.
Now, you might be wondering, why silver? Why not gold, real estate, or even stocks? What makes silver such a critical asset in today's market conditions? Well, let's break down why silver is uniquely positioned to outperform other investments in 2024. First, silver's dual role as both a precious metal and an industrial commodity sets it apart from gold. Gold is often seen as the go-to safe haven, but silver has something extra going for it. It's industrial demand. Silver is used in everything from solar panels to electronics, electric vehicles, and medical devices. These industries aren't slowing down. In fact, they're growing, which means that even as investors flock to silver for its wealth-protecting properties, Industrial demand is pushing up prices too. Second, silver is undervalued compared to gold. Historically, the gold to silver ratio, that is, how many ounces of silver it takes to equal the price of 1 ounce of gold, has hovered around 60:1 or lower in normal times. But today, that ratio is much higher, around 80:1 or more. This indicates that silver is significantly cheaper than it should be compared to gold. As investors realize this and seek a bargain, silver's price can quickly catch up, and historically, silver tends to move faster and more explosively than gold when the surge hits. So, while gold is a great store of value, silver has the potential for far greater upside. Another key reason silver stands out is accessibility. Unlike other assets like real estate or even large quantities of gold, silver is much more affordable for the average investor. You can buy physical silver in smaller amounts, making it easier to stack up over time. Plus, silver coins and bars are widely available, highly liquid, and recognized globally. So whether you're a seasoned investor or just starting out, silver offers a way to protect your wealth without needing huge upfront capital. But here's the most important point. Silver performs best in times of financial crisis. Historically, when paper assets like stocks, bonds, or fiat currencies lose value, silver rises. And in today's world, where stock markets are inflated, government debt is out of control, and currency devaluation is a real threat, silver offers that tangible real-world security that paper assets simply can't match. So when Mike Pento says you should be stacking silver, it's because silver is one of the few assets that benefits from both the chaos of financial markets and the growth of crucial industries. Whether the economy strengthens or weakens, silver is poised to thrive.
I don't live in the world of overbought or under. That's a short-term thing. I just look at the secular trends of the economy. So the secular trend of the economy is for nominal interest rates to be lowered, and like we started out your first question, the Fed understands that the government can't pay $1 trillion in interest in debt. So they're going to have to get short-term and long-term rates lower. So if nominal rates are down, they do that by printing money, and that means real interest rates rise. So gold could be in a secular bull market that's just beginning. I don't care if it's overbought. I don't care if it pulls back 10% or 15%, 20%. I don't care. I mean, it's not nice to see. It's not going to make me happy. But I'm looking at long-term secular trends, and the trend is much higher, in my opinion.
And that's because of lower interest rates?
It's because of lower nominal and real interest rates. That's the only thing gold is really concerned about. Of course, World War III doesn't hurt it either. And God forbid that happens, but you do have a lot of geopolitical conflagrations going around. Not only Ukraine, you have the Middle East. So, I mean, that does tend to help the price of gold, but that's just historically speaking, that's just a very temporary blip. What gold is seeing is that the U.S., so we're looking at the dollar price of gold. The U.S. is becoming insolvent. Debt and deficits are out of control. The Fed can't raise interest rates to fight inflation. They panic to lower interest rates. That's less competition for gold, which pays no interest. And it pushes more people into that hedge.
When it comes to silver, the story always circles back to one crucial factor: investor demand. Time and time again, we've seen how silver prices surge when investors rush to it as a safe haven. This demand has historically been the biggest catalyst for silver's explosive growth, and right now, all the signs are pointing towards another wave of intense investor interest. Let's start by looking at what's been happening over the last few years. Since 2019, the market has seen a steady increase in the number of people buying physical silver, coins, bars, and rounds. This trend began during the uncertainty of the global pandemic, and it hasn't slowed down since. In fact, demand for silver in 2023 was so strong that many mints around the world struggled to keep up with production. Investors, big and small, are starting to see silver as a safe store of value in a world that's becoming increasingly unpredictable. But it's not just individual investors. Institutional demand for silver is rising as well. We're talking about hedge funds, asset managers, and even central banks moving into precious metals, especially silver. These institutions see the writing on the wall. They know that inflation is eroding the value of fiat currencies, and they're looking for tangible assets that will hold their value over time. As inflation continues to climb, we can expect to see even more institutions adding silver to their portfolios. Now, why is this sudden surge in investment demand happening? Well, one reason is that silver is still affordable compared to gold. For many investors, especially those new to precious metals, silver offers a way to protect their wealth without the high price tag that comes with gold. This affordability makes it easy for both small investors and larger institutions to accumulate silver in bulk. And here's where things get interesting. In the past, when silver investment demand has surged, prices have followed in a big way. Look back to 2011, when silver prices shot up to nearly $1.50 an ounce. This wasn't because of some major shift in supply or industrial use. It was driven primarily by a massive wave of investor buying. And now, experts like Pento believe we're heading toward another similar event. The signs are all there: uncertainty in the global economy, inflation fears, rising debt, and a lack of faith in traditional financial systems. Investors are looking for alternatives, and silver, with its long history as a safe haven, is an obvious choice. The demand we're seeing today could be just the beginning, and once the floodgates open, we know from history how quickly silver can move. So if you haven't started stacking silver yet, or if you're looking to add more, now could be your best chance before the price takes off. Remember, silver is one of the few assets that benefits from both increased investor demand and industrial use, making it a unique opportunity in today's market.
I think they have to crash. It's just, I don't see, getting the timing right is, I manage money for a living, Elijah, as you know. So I'm not net short the market right now. I don't even have any shorts at all, except for a very tiny short in high yield. It's my only short that I have. But I'm long India, working out well. I'm long gold. I actually bought some silver recently. That's, I think that's on the verge of a major breakout. I own utilities. We own all kinds of things here because it's not time yet. My model is built. My inflation, deflation, economic cycle model is built as a timing tool. But just because it hasn't triggered me to get net short the market doesn't mean that I'll never have to get there. Because like you said, these problems are extant and they haven't gone away. They're only getting worse. The debt continues to pile up. Corporations are issuing more and more debt. If you look at total non-financial debt to GDP, it's at a record high. The government is insolvent, 720% debt to revenue, as far as the Treasury is concerned. That is incredible to me. Our deficits are $2 trillion per annum in supposedly good times, right? In times of full employment. So there's huge problems that have just not they haven't come to the surface yet, but they're festering underneath. And when they come to the surface, it's going to be a huge, huge problem. Because at the end of the day, I believe in mathematics and genuine economics, and I believe in reality. And the reality is that home prices are about 40% higher than what they need to be affordable to the average American. Home price to income ratios are that much out of whack. And the same is true for the stock market. It's about 50% overvalued if you look at the total market cap of equities as a percentage of the economy. So these things tend to mean revert. If you believe in mean reversion, then they're going to happen.
While silver has long been seen as a hedge against economic uncertainty, it's important to remember that it's not just a precious metal, it's also an industrial powerhouse. In fact, silver plays a vital role in some of the most rapidly growing sectors of our global economy. And right now, the demand for silver in these industries is skyrocketing, which could be a game changer for its price. One of the biggest drivers of silver's industrial demand is the green energy revolution. Governments and corporations worldwide are pouring trillions of dollars into renewable energy projects, and silver is at the heart of this transformation. Solar panels, for example, rely heavily on silver for their photovoltaic cells, the part of the panel that captures sunlight and converts it into electricity. In fact, nearly 10% of all silver mined each year is used in solar energy production, and that number is expected to grow as countries ramp up their efforts to combat climate change. Let's put this into perspective. According to reports, the global push for green energy could double or even triple the demand for silver in the solar industry alone over the next decade. With governments passing aggressive climate legislation and setting ambitious renewable energy targets, the demand for solar panels, and by extension, silver, will continue to surge. This isn't just speculation. It's a well-documented trend that's already underway. Countries like the US, China, and members of the European Union are committed to significantly expanding their solar infrastructure, which will create sustained, long-term demand for silver. But that's not all. Silver is also a key component in the electric vehicle EV industry. As the world moves away from fossil fuels and toward electric vehicles, silver's unique properties, like its unmatched electrical conductivity, make it an essential material in EV production. From the wiring systems to the battery connections, silver ensures that electric vehicles function efficiently. With global EV sales expected to explode in the coming years, silver's role in this industry will only grow. And it doesn't stop there. Silver's industrial applications extend into electronics, medical devices, and even the 5G rollout, where its superior conductivity is crucial for high-speed data transmission. In short, we're witnessing a technological revolution that's creating a massive, ongoing demand for silver across multiple industries. What does all of this mean for silver prices? Simple rising industrial demand creates a strong base for silver, supporting its value even during times of economic stability. But when you add in the explosive potential of increased investor demand, like we're seeing now, the result could be a perfect storm for a silver price surge. So, while many people think of silver as just a safe haven asset, it's clear that silver's future is tied to some of the most exciting technological advances of our time. And that's what makes it such a compelling investment right now. We're not just talking about protecting wealth. We're talking about getting in on the ground floor of a metal that's critical to the future of energy, technology, and transportation.
It's taking longer than even I would have thought, but who cares? I mean, there's just so much liquidity out there, and the Fed and other governments keep trying to delay the inevitable. But you can't delay the inevitable. I mean, in the national course of, listen, let's just take an example. I'll give you a perfect example if you're confused about what I'm talking about. Let's look at Japan. Japan has a quadrillion yen in debt outstanding, and the bond market. If the bond market in Japan, if JGBs was reliant on tax revenue to finance the debt, their interest rates would be double digits. However, that can't happen in Japan because the Bank of Japan raised interest rates to 0.5%, and it caused chaos in the global markets because it was an unwind of the yen carry trade and markets were flushed down the toilet. The Bank of Japan can't even raise interest rates to 0.25% to 0.5%, but that's because the Bank of Japan owns almost all of the government bonds. A vast majority of JGBs, Japanese government bonds. So this is what we're heading into. So in reality, the 10-year note has no darn business trading at 3.7% or 3.8%. No way. Not with inflation just ending 9% and an insolvent government and $2 trillion deficits. No way. So without the Fed's balance sheet being now $7 trillion, without the Fed's put out there, interest rates would be much higher, which would bankrupt the country because we have so much debt. So the Fed has to print money, but if the Fed prints money, you get inflation, and that means bonds have to rise. Bond yields have to rise. So it's catch-22. And that's what happened. This is not a new phenomenon. This is what happened in every country that has went bankrupt in the past, which you print money to make.
Now that we've seen how silver is perfectly positioned to benefit from both rising investor demand and surging industrial use, it's time to focus on what Mike Pento is predicting. And the numbers he's talking about are eye-opening. Pento, a well-respected financial strategist with years of experience, isn't making casual guesses about silver. He's been tracking market trends, inflation patterns, and monetary policy closely. And based on what he's seeing, he believes we're on the brink of a massive silver price surge. So what exactly is he predicting? According to Pento, silver could easily double or triple in price in the coming years, potentially reaching levels we haven't seen since its previous peaks around $1.50 per ounce. But it doesn't stop there. With the perfect storm of inflation, global debt, and skyrocketing demand for silver in industries like green energy, he believes silver could even push beyond $100 per ounce under the right conditions. Let's break down why these numbers are realistic. First, we're dealing with a major inflation problem. Central banks, including the Federal Reserve, have been printing money at an unprecedented rate to keep their economies afloat. And while they've tried to cool inflation by raising interest rates, the reality is that we're still living with significantly higher prices across the board: housing, food, energy, you name it. Inflation is one of the key factors that drives precious metals prices higher because when fiat currencies lose value, investors flock to assets like silver to protect their wealth. This is exactly what we're seeing now, and it's why Pento believes silver is set for a huge move. On top of that, the global debt crisis is putting even more pressure on traditional financial systems. Governments around the world are grappling with record-high debt levels, and many are simply printing more money to stay afloat. This weakens confidence in fiat currencies and makes physical assets like silver all the more attractive. The more people lose faith in government-backed currencies, the more they turn to tangible, time-tested stores of value like silver. And remember, this isn't just about fear or speculation. There are real, tangible factors pushing silver prices higher, especially its critical role in green energy and technology. With so much demand coming from the solar, electric vehicle, and electronics sectors, the supply of silver is going to be stretched thin. Pento sees this growing demand as another major factor in his bold forecast. Now you might be thinking $100 silver sounds ambitious, but think back to previous silver surges. In 1980 and 2011, silver prices skyrocketed because of similar market conditions. Inflation was high, debt was out of control, and investors were desperately seeking safe havens. We're seeing those same conditions again in 2024, and this time, the industrial demand for silver is even stronger. So when Mike Pento says silver could double or triple, he's basing that prediction on sound market analysis. He's been right about silver before, and with everything happening right now, his forecast is gaining serious attention. The question is, will you be ready when silver starts its climb? Because once the surge begins, it could move fast, leaving latecomers scrambling to get in.
The debt solvent, which causes inflation, which causes interest rates to rise, so you have to print more money, causes hyperinflation, and you destroy the economy. I mean, that's where we're headed, unfortunately. And I never thought that, when I was a kid, I first got in this business in 1991, I never thought we would let this happen. But, we were supposed to be a country that tied our monetary policy to gold. That was destroyed completely in 1971. I'm old enough to remember 1971. Not really. I was only 8 years old, so I wasn't watching Tricky Dicky back then and closing the gold window. But I remember how terrible the 70s were because of gas lines and everything. My father had to get up at like 4 o'clock in the morning to sit on a gas line to get an odd and even license plate number to get gas. Do you remember that, Elijah? How old? Come on. I don't think you remember that, but I bet your dad does.
No, that was before my time.
A little bit, right? He's like, what is he talking about? But inflation has destroyed every fiat currency throughout history, and unfortunately, the United States is traveling that same road because our balance sheet, the Fed's balance sheet, which is called high-powered money, was zero before 1913. But from 1913 all the way to 2007, it took them all those years to print $800 billion. And from 2007 to 2022, that $800 billion went to $9 trillion. Zimbabwe would almost blush. $9 trillion of high-powered money, which is, well, why do we call it high-powered money? Because it's physical currency and coins in circulation plus Fed credit, which is the building blocks of all money. It goes into the banks, and the banks use those reserves to create loans and to buy bonds and to expand the money supply. That happened in the United States. That happened. And unfortunately, I think it's going to happen again. And imagine if the Fed's balance sheet goes...
With all the factors aligning for a massive silver surge, rising inflation, growing industrial demand, and increasing investor interest, it's time to talk about what you can do to prepare. Mike Pento isn't just making bold predictions for the sake of it. His message is clear. If you want to protect your wealth, you need to start stacking silver now, before prices take off. But how exactly should you approach this? Let's break it down. First and foremost, you need to decide how you want to invest in silver. The most popular option for many is physical silver, coins, bars, and rounds. These physical assets are a solid way to hold something tangible that can't be inflated or devalued like paper currency. Silver coins such as American Eagles, Canadian Maples, or even generic rounds are recognized worldwide, making them highly liquid and easy to sell when the time comes. If you haven't started stacking physical silver yet, now is the perfect time to begin. If you're already holding physical silver, consider increasing your position. The truth is, once a surge like this starts, silver prices can move fast. We'd seen it in the past. Prices can spike in a matter of weeks or even days. Waiting too long could mean missing out on a significant portion of the gains. Remember, silver is still trading at a historically undervalued level compared to gold, so there's a lot of room for growth. By adding to your stack now, you're positioning yourself to benefit when silver begins its rise. But physical silver isn't the only option. You can also look into silver mining stocks, or ETF, exchange-traded funds that track the price of silver. While physical silver gives you the security of holding something tangible, mining stocks can offer even more leverage. As silver prices rise, the profits of silver mining companies tend to rise even faster. This can provide you with potentially higher returns, though it's important to remember that mining stocks come with their own risks, including the operational risks of the companies themselves. ETFs, on the other hand, allow you to invest in silver without holding the metal physically. They track the price of silver, giving you exposure to its movements in a more flexible way. No matter how you choose to invest in silver, timing is key. Mike Pento's forecast suggests that we're on the brink of a major silver surge, and you don't want to be left behind. We've seen silver jump from $5 to $50 an ounce in the past, and if his predictions are correct, the next surge could be even more explosive. Acting now, whether by buying physical silver, mining stocks, or ETFs, can ensure you're ahead of the curve. But here's a crucial point. Don't wait until silver starts moving to act. By then, the price will already be rising, and the window of opportunity will be closing fast. Start building your silver position today, while prices are still low, and you'll be ready to benefit when the surge hits. And remember, it's not just about potential gains. It's about protecting your wealth. With inflation eroding the value of your dollars and global debt spiraling out of control, silver offers a safe haven where your wealth can be preserved. In times of economic uncertainty, those who hold physical assets like silver are often the ones who come out ahead. So, whether you're a seasoned silver stacker or just starting out, now is the time to act. The pieces are falling into place for a silver surge like we haven't seen in years. And the best way to protect yourself is to start stacking as much as you can today.
To $20 trillion, $30 trillion. And you don't want to own gold? I mean, I don't use curse words, I try not to do that. But I'll just say, I'll call it Bitcoin. I'll be kind. Bitcoin, if Bitcoin can go to $63,000 a unit, then why can't gold go to a few $1,000s an ounce? Because, and I don't know why I went down this road. You have to forgive me, but gold AU comes from exploding stars, and it's an element in the Earth's crust. It's very limited, and you can't create any more of it. It can't be created. Okay, and it's beautiful, and it's virtually indestructible, and it's extremely rare. However, cryptocurrencies are based on blockchains, which there are unlimited numbers of blockchains that can be created, where this ledger, digital ledger, where a coin can ride along. So they're not unique. I don't care if there's 21 million units of Bitcoin, because there's thousands of cryptocurrencies that trade that do pretty much the same thing, right? So I'm finished with my diatribe there. Go buy yourself some gold. And listen, I don't sell gold. I'm just saying that if you believe, like I believe, that real interest rates are falling and nominal rates will be capped because the government is insolvent and they can't afford to pay interest on the debt, which is why Mr. Powell lowered interest rates in the first place, then you need.
Everything we've discussed so far points to one critical conclusion. The silver surge we're on the brink of could be bigger than any we've seen before. We're not just talking about a temporary bump in prices. We're talking about a seismic shift in the silver market that could redefine how we view this precious metal for years to come. Think about it. In the past, silver has surged when the global economy faced inflation, debt, and uncertainty. But this time, we're facing those same challenges on a scale that's even larger and more complex. Inflation is higher, debt levels are unprecedented, and geopolitical tensions are more volatile than ever. These aren't just short-term problems. They're long-term trends that are pushing more and more investors towards silver. Add to that the massive industrial demand we're seeing from green energy, electric vehicles, and advanced technology sectors, and it becomes clear that silver is no longer just a safe haven for uncertain times. It's a vital resource that the world needs to power its future. This combination of rising industrial use and investor demand creates a perfect storm for silver prices to not only surge, but potentially reach new all-time highs. And this is exactly why Mike Pento is urging silver stackers to act now, because once the surge begins, it could happen fast. In previous silver booms, prices have jumped by hundreds of percent in a matter of months, and with all the factors aligning in 2024, the potential for silver to hit $100 per ounce or beyond is becoming more and more realistic. But here's the thing. You need to be prepared before the surge happens. The window to buy silver at these relatively low prices is closing fast. Once the wave starts, latecomers could find themselves scrambling to buy in as prices soar. Don't let that happen to you. Whether you're stacking physical silver, investing in mining stocks, or buying silver ETF, the time to act is now. Remember, silver isn't just about profit. It's about protecting your wealth in times of crisis. As inflation continues to erode the value of paper currency and governments struggle with overwhelming debt, silver offers the kind of protection that few other assets can. It's real, it's tangible, and has stood the test of time through every financial crisis. So if you're serious about safeguarding your financial future, take Mike Pento's advice seriously. Start stacking silver today before the surge hits and prices skyrocket. This isn't just about riding the wave. It's about being prepared for what's coming. Protect your wealth, secure your future, and make sure you're not left behind when the silver market makes its next big move. And remember, this isn't financial advice, but it's a conversation we can't afford to ignore. If you're ready to take control of your financial destiny, subscribe to the channel and join us for more insights on silver, gold, and the world of precious metals. Let's navigate these uncertain times together and stay ahead of the curve.
Elijah, I don't have to predict going out months and months and months and quarters and years. I don't do that. So the model is updated every day. And I'm going to stick to my model. Right now, the model says that economic growth is going to slow. And there's no reason for me to believe that economic growth is going to surge. It's just not going to happen. There's not going to be a huge reflation of growth. So I'm looking into the middle of 2025. There could be a fiscal cliff coming. So if we have a divided government, and I don't know if we are or we aren't, but the odds are very high that we will have some form of divided government. So one, a Republican, Democrat has the White House, and Congress is split. And that means it's going to be very difficult to extend the Trump tax cuts, which were instrumental in causing inflation and growth to jump in his first term. So if that's the case, then I believe we're going to have huge problems heading into the later half of 2025 and 2026. Could be very bad. But that's just a prediction, and I'm not trading on. I don't trade on what's going to happen next year. What's happening now is you have slow, anemic growth, but not a recession. It's not a recession now. We have a lot of problems in the economy. The allocation is for bond and bond proxies, which have worked very well. We have some physical gold and physical silver. We have India in the portfolio. We have utilities in the portfolio. So we have no shorts except for a small short in high yield. We're going to hold that. And when things change, I change. But the model is a predictive model. So it predicts when things are going to change. And right now, it doesn't tell me I need to get all panicky about the stock market. So I'm not going to do it. And when people call me a perma-bear, what they think they're referring to is that I'm a perma-bear on the fundamentals of the U.S. economy. And it's not just the U.S. economy. It's almost all developed economies in the world. In other words, I don't like economies that are fake, artificial. I think economies should be market-based, based on what the people want. That's the beauty of America. It's a free market economy. Not that it's perfect, but it's based on the millions of people voting every day with what they want and having companies respond to that need. That's no longer the case here. We have an artificial economy. We have an economy that is controlled by fiscal and monetary madness. So that's what I'm bearish on. But if I was bearish on the stock market all the time, I wouldn't have a business, a thriving business, thank God. But I do. And the reason why I have that is because I understand when it's time to go short the market. You go short during recessions and deflations and liquidity crises. And what you go long matters.